Let's jump right in, Maverick traders, to our next candlestick pattern. Joe with you here once again. Welcome for joining me. Let's get into a bearish Marubozu pattern. This is a single candlestick pattern, and it's specific to continuation of momentum. But I've found, as with everything, that depending on where you find it and where it's placed in the overall trend and pattern, we can give all sorts of different signals from it. First things first, folks, let's jump into the Bolkowski statistics of this bearish pattern. Theoretical performance is a continuation. We've talked a lot about reversals, but the last couple, this one included bearish and bullish Marubozu, are specific in continuations. Tested performance overall, 53% of the time, so it doesn't quite do it as often as maybe we would like to see. Now, where this pattern develops can actually increase that, and we'll add that to it here in a minute. Frequency rank is 30 out of 103, so they're more than half frequent, mid to upper range of frequency. Now, folks, I'm going to go ahead and just be honest. I had a hard time finding a true Marubozu, which I'll show you here in a minute. Has no shadows, but there are variations of it. So I want to go ahead and give you those variations as well. Let's continue with our statistics. The overall performance is 57 out of 103, just above average there, pretty much in line with average. Best percentage, meeting price target 78% of the time in a bull market up breakout. Now, this is a bearish Marubozu candle. This candlestick is to project momentum or continuation in a specific direction to the bear side. So here is our price target being met in the bull side in an up breakout. If you guys are following along with the series, we had the same issue with the bullish Marubozu. So let's continue on. Best average move in 10 days is a move of 5.33% to the upside. This is in a bear market, which is what I want to use these for, and a down breakout, but they seem to retrace. So those situations could be capitulation. Yes, folks, if you don't know what I'm talking about, we've got a whole big thing here at Maverick on it. Capitulation is basically a bottom, a sell-off to the bottom, high spike in the VIX, tries to turn around. These candlesticks are common. I won't get into that. That's a separate class. Best 10-day performance is 24 out of 103. And the reason being is because the overall rank is 57. Meeting its target is 78% of the time, even though the target I would expect to be to the downside was up, and it's just shy of that 6% that Bolkowski loves to see. So he did give it a mid, I'd say a higher rank of 24 out of his 103. So what does this pattern look like? Well, I created one for you here. We've got some bullish candlesticks, the bearish Marubozu itself, and its confirmation. Now, a couple things that I wanted to point out with this slide, and then I'm going to go to the next so we can draw some variations of the Marubozu, is if you take a look at where this opened and closed, a Marubozu, once again, is a candlestick that has no shadows. It opened on its high and it closed on its high. This is a bearish because it opened higher than it closed. The bullish is, yes, that's correct, folks, the inverse. But what I liked about this pattern is you can see that I created the open and the close in this bearish Marubozu to completely engulf the previous bullish candle. That's right, folks. I've done so many of these, I'm testing you on the previous ones. A bullish or bearish engulfing pattern. This is a bearish engulfing pattern, which is also a bearish reversal signal. So I decided, hey, it'd be kind of fun. Let's make a Marubozu that engulfs the previous candle. Yes, I'm combining stuff already. Whether or not you saw that, it doesn't matter. This is a candlestick that opens and closes on its high and its low. And there you go. So how can we dig into this a little deeper? Well, there are some variations, right? So I'm going to get into the variation of the Marubozu candle, or bearish Marubozu to be more specific. The first thing I'm going to do is a Marubozu on close. Now that would mean that it didn't quite open on its high. It means that it did not open on its high. It set a high and then came back down and it closed on its low. So you can see there is no shadow on the low. This would be a Marubozu, bearish Marubozu on close. Second one I'm going to show you guys is, yes, you guessed it, a Marubozu on open. Now, if you guys have seen my previous video, then you'll know that I did this exact same thing with the bullish candlestick, but called it opposite. Why did I call it opposite, folks? Yes, I'm coloring this in for you. You're welcome. Is because it's a red candle versus a green candle, or black, white, open, whatever you want to call the colors that you use. This would be a classic example of a bearish Marubozu on open, meaning it opened up at the top here, did not set any sort of a higher shadow, but did not quite close on its lows, retraced a little bit lower. Well, what does that do? Well, depending on where it falls and how it behaves, a lot of people will take into consideration that, hey, if this, for this example here, if this closed off of its low, then maybe there was a little bit of buying at the end there, or a little bit of a slowdown in selling. A true Marubozu is nice because it's conviction in direction, which is what we're using these for when it comes to continuation. So where would I like to see a bearish Marubozu? That's obvious. I'd preferably like to see it in a downtrend, a down chart, something that would have a bear rally or a move to the upside with a reversal signal. And this does not have to be the pivot point candle. This could be the secondary candle. I just want to see something very aggressive. Interesting enough, and I'd like to point this out since I use this same slide. But check this out, folks. That's a Marubozu, at least on open. And then it came back down. It might be on close. This shows the continuation, or conviction, I should say, in direction. This is after a bull pullback. So I do like this. This just shows that the possibility of the continuation is going to be high, right? Kind of funny. I've used this chart on every single example, and I happen to find a candlestick pattern in it. So preferably in a downtrend. This could also signal a capitulation bottom or the end of a downtrend. And I'll see if we have an example of that moving forward. So it is a reversal pattern or a continuation in a breakdown. In this chart to the right that you saw me just illustrate, it is more of a continuation as it breaks a support level. Let's go ahead and continue to draw some stuff for you, folks, because I don't know if a lot of you noticed this. But not only did it show continuation as it moved lower, here's that Marubozu again. It continued down, but look, it broke a support level. So this Marubozu candle happened to happen at the same time we had support. Now you can associate that with some volume. I don't have it down here. Once again, I'm combining 6, 7 different classes we teach here at Maverick to get all of our ducks in a row. But this one is a pretty decent one. So I'd like to see it as a reversal capitulation, in this case as a breakdown continuation play. Confirmation will be below that Marubozu slow, so we need to see a candlestick that says, okay, I'm going to continue to go down. That just increases our probability. The higher level of frequency with a low price performance, and the reason being is because it's only 53% of the time. Also, what Bolkowski found is once it did confirm to the downside after 10 days, more often than not, it retraced 5.33%, I believe, over 5%. So we're running into the same situation of, depending on where this candlestick develops in the overall trend or move within a trend, is going to be a big deal. Let's go out and take a look at a couple of examples. So let's move into our first example. You could see that we've got ourselves a little bit of a move to the upside here, and then it kind of plateaued and came back down. I just want to see if this is going to continue a downtrend. So the first example is going to be definitely here in our downtrend. So let's find out where we go from here. There's a little bit of a move higher, and I'm looking for a Marubozu. Now, we actually, at this point, have established a little bit of a resistance level right around this area, and we could roll over from here, which would be nice because it would actually set a lower high. So this would be a continuation in a bearish trend. I'm just looking for a Marubozu candle, and there it is. And there's our Marubozu right here. You guys can see this. Let me zoom in a little bit there. There we go. Looks pretty clean to me. Some of these are a little bit off. So folks, I apologize. My next examples are have a little bit higher or lower on them. But hey, we're going to work around it. So this Marubozu is showing that, hey, we could see some continuation coming off of these lower highs here. And we're just going to have to see where it goes. Let's give it a day to see if it confirms. And it looks like it didn't. Now, here's why. This candle gapped down and moved higher. And so I would like to see we need to see a candle that actually closes below the Marubozu's low. We did not get that. We can see that the next day we sure did. You could see the line here, went straight across, it closed, it looks clean. Now let's see what happens over the next 10 days. Just like Bolkowski found after the confirmation, it's had to move to the upside. So this didn't quite show either continuation nor specific pivot. The reason being because this didn't pivot till 1, 2, 3, 4 days after the formation of the bearish Marubozu candle. Let's take a look at our next example. Now for the next example, folks, I wanted to find something that was a little bit more sideways. You can see that we are in a little bit of a consolidation pattern. I'm going to see if this continues, and it looks like it's chopping along. Now we just got to wait for this Marubozu. So you can see we have an increasing highs here, increasing lows, but let's see if this is going to roll over and break down once we get our Marubozu. There it is. So this one isn't technically specifically perfect. I think it's got a slight, it's within 10-15 cents, and this is a 200 and change stock, folks. So I'm going to call this a Marubozu. So here it is. It looks pretty clean, so we want to see if it confirms the next day, and it sure did. Now this gap down, the conviction and direction with these candlesticks is great, because if they do confirm, they confirm quick and aggressive. Sometimes we miss them. However, I do like how this is broken down, showing that, okay, it's slipping lower. Now we do have support over here to the left, so we'll see if this is going to continue. Let's count the next 10 days. All right, so this one didn't really gain or lose any traction. You can see the formation of the Marubozu here on the left. Then it gapped down and confirmed, rolled down and came kind of right back up. This did stay lower, but it didn't really continue or gain any traction or momentum. So the first one we looked at turned right around. This one actually just completely went sideways. Let's take a look at another example. Okay, in this example, guys, we have a stock that has moved lower, set a lower low, and it's on its way back to see if it can't maybe roll over. So this is in the midst of a bear rally. So it looks like it confirmed its bear rally. So the next thing I need to do is find out when this Marubozu occurs. A little bit of a pullback here. We'll see what's going to happen. Okay, so now we got a little bit of a consolidation, right? A symmetrical triangle pattern. Let's see if this can set a Marubozu, maybe play this to the downside. And there we have it. There's our Marubozu. Now this one is, it's close, folks. It's a Marubozu and open, and I think it closed just shy of its low. The low was 199.41, and its close was 199.79. So it's within a few cents. Now, with the Marubozu candlestick, in this case, you could call it a Marubozu on open. That's fine. The confirmation needs to occur the next day, in this case, to the lower side. So let's take a look at the next day. So if this did not confirm, the candlestick actually closed above the low or the close of the Marubozu. So this one hasn't confirmed yet. Let's see if it does over the next 10 days. So there's 10 days from the Marubozu, and you can see what I love about waiting for confirmation is this thing went completely up. This supports what Bolkowski found in the percentage overall, is these actually finished over 5% to the upside, and this is probably it, because not waiting for confirmation and just allowing the chart to go can really kind of throw that off. So I'm glad this didn't work out. We didn't get into this, but I don't want to end on this. Let's find one more example, and then I'll cut you guys loose. All right, guys, for this last example, I'm going to find something a little bit more consolidating, something moving a little bit more sideways, and let's see what happens if we get this Marubozu to develop. Looks like we are kind of pretty volatile, whatever's going on here. Some bigger moves. Let's keep going a little bit. Okay, right off that support level here around 300. Let's see if it's going to... Oh, there it goes. There's the Marubozu I'm looking for. So this looks like it turned around and absolutely failed through the support level. We'll see what happens if it confirms the next day. It did not. So this one did not have the follow-through with the continuation that this candlestick is for. Keep in mind, with all the examples we've just had, 53% of the time these show continuation in direction. This is what we're finding here with Bulkowski. None of these really did. I think 1 out of the 4, which means these are a coin flip. So waiting for confirmation and where they develop is super important. Let's go 9 more days to see what the full 10 days did. And we really just didn't go anywhere, did we? Now, fine. This thing just turned around, never really confirmed, went right back up. Looks like it's consolidating at previous support levels. So this candlestick's almost worthless on its own. This has to be correlated with a couple of other things, guys, and I'll tell you exactly what that is. Let's get into a little bit of our review. Now, it's no different from the previous pattern, if you guys have been following along with this, which is the bullish Marubozu. I'm just going to skip down to number 4. This thing is best if you combine it with other different types of patterns or situations in the charts as well for better probability. In fact, the example I used for this is a bearish engulfing. So if we had a Marubozu at the top of a bull pullback at a pivot point with a bullish engulfing Marubozu candle, that increased our probabilities on top of probabilities with the confirmation that we could get a move to the downside. This candlestick by itself, I found, just like Bulkowski did, it's super infrequent when it comes to continuation. So what do we learn? The pattern frequency is 30, slightly above average because it happens often, but just because it happens often doesn't mean it's really worth much. Pattern is a continuation 53% of the time. Remember, the bullish pattern, I believe, was 56 or 57% of the time. So the bullish one was a little bit better than the bearish pattern, but 53% to me, it's a coin flip. Tested performance rank is mid, just 57 out of 103, right in the middle there. And the reason being is because it had more of a chance, well, it had a better performance to the upside than it did to the downside. But with that small edge of 53% of the time, this is going to be difficult by itself. Keep in mind, this is by itself. So it's best to combine this pattern with others for better probability. I just wanted to say that one more time. That's what we like to do here at Mavericks Traders. Take this Bulkowski stuff and all these great candlesticks, put them on top of 2 or 3 or 4 things to really increase momentum, really increase probabilities, and go from there. All right, guys, thank you so much for joining me. We'll see you on the next pattern.